So tax is basically one of the biggest expenses that you're going to have to pay out across your whole life. So it only makes sense to want to try and legally reduce your tax bill. And with so many of the tax thresholds having been frozen over the last, say, 2 or 3 years, it's become more important than ever to try and manage your tax liabilities as much as possible. So in this video, we're going to be going through some of the key tax busting methods that you can be employing to try and reduce your overall tax bill. And I know that the tax code looks more complicated than a Game of Thrones family tree, but understanding how the tax code works can really help you take advantage of some of the benefits that are in there. But let's just be clear right from the off, this is not necessarily tax advice. People's individual tax advice will be based on a plethora of potential situations. It will be very circumstantial. Make sure you are seeking professional and qualified tax advice. Let's get into it. ISAs. Now, don't get me wrong, it is insane that you're not taught about this in school. It's insane that you have to go out and specifically research these things. You have to educate yourself in the tax system in order to take advantage of it. So let's just get that out of the way. It's annoying that you even have to go through this process, but until that changes, let's go through that process. So the ISA has come under a lot of scrutiny, not least of all from me recently, the new British ISA being a bit of a shit ISA, to be honest. So the first thing you can be doing is making contributions to your ISA. Now, your ISA is effectively a government-sanctioned tax wrapper, which means that any money that you put in there, up to the limit of £20,000 a year, all the income and all the gains that you receive from it will be exempt from tax. The ISA is one of the most important assets when it comes to building longer term wealth, and that's for a few reasons. The first is that unlike a pension, it's taxed kind of differently in that you have to contribute to it post-tax, but it's got the benefits on the other side. The other thing is you can access that money, so unlike a pension which you can't access until you're 55 and then it's going up to 58 in 2028, I think. So you can have access to that money as and when you need it. And the other thing is there are so many different kinds of ISA. So the first thing I think you should be doing is looking at all your ISA allowances and seeing which ones you're going to be able to maximise. If you are just hypothetically in a family, say it's you, your partner and 2 kids, you get £20,000 for you, £20,000 for your partner. If your kids are under 18, you get £9,000 for one kid, £9,000 for another kid. You start to add in your ISA allowances and it tots up to like 60 grand or something. Now clearly you have to be making a load of money to be able to maximise all of those allowances, but the key point is making sure you're contributing to those can be just such a helpful way to reduce your overall tax bill. And I've also seen a bit of hate online for the ISA, and I don't really understand why. I think it's a really good scheme and people are just in denial about it. You know, they're up a river in Egypt. Pensions. Now, I can hear people's eyes glazing over, the groans. You know, I get it. Pensions are filled with intercontinental ballistic boredom, but stick with me on this one. Let's just very quickly do a recap. In the first video in this series we went into this in a lot more detail, so make sure you check out that video once you're done here. Let's just say you make about £60,000. Because of the way marginal tax bands work, the first 12,500 you'll pay no tax on, the next 37,500 you'll pay about 20% on, and the final 9 or 10,000 you'll pay 40% on. So what it can be worth doing is using your pension contributions to manage your taxable income. So what do I mean by that? Pension contributions are exempt from tax. So if you earn £60,000 and you want to make a £5,000 pension contribution, then your taxable income will only be £55,000. So by making a pension contribution, it takes you just below that limit and you still get access to that benefit. So using pension contributions can be a really key way where you can still get the benefit of that money, but obviously, as we just mentioned with pensions, you can't necessarily access that money until you're in your 50s. So it's just another thing to bear in mind. Now, the benefit about pensions is they are virtually the only investment vehicle in the land that will guarantee you 100% return on your money. Because if you contribute some money to your pension and your employer matches, then you've doubled your money straight off the bat. So pensions can be an extremely powerful way to not only manage your tax bill, but to also build longer term wealth and help to really secure your financial future in retirement. Annual pension allowance. Mother of another pension point I hear you saying, but this one's an important one. So the personal pension allowance was basically used to be up to £40,000. They've now, for 23-24 tax year, increased it to £60,000. But the benefit here is that you can contribute £2,880 to a pension every year, and the government will top up an additional £720 a year. So again, it's another small benefit which just making sure you're taking advantage of. And don't forget, if you're a limited company, then making pension contributions are tax deductible, so you can get a bit of a double whammy benefit there by reducing your overall corporate tax liability. Pension carry forward allowance. Oh, Odin's Raven. Right, I promise this is the last pension one. So this basically means, unlike a lot of other allowances like the ISA allowance, with the ISA allowance it's £20,000 a year every year, but unused allowance balances can't get carried forward into the next tax year. So it's a case of, if you don't use it, you lose it. But when it comes to pension allowances, you can go back and use unused balances for the last 3 years. So conceivably, now that we sit at £60,000, there's £180,000 that is potentially up for grabs, and this can really help you manage your tax bill downwards. Now, one of the key things about pensions, which we should also come on to later on in the video, is that they are also exempt from inheritance tax. So this can be a really good way of, just if you're later on in life, you've got chunks there, just putting it in there can be just a much more effective way of building longer term wealth. Getting paid the right way, as we talked about in the first video, link in the description or something, making sure you're getting paid the right way can be really key to what you're doing here. So for this YouTube channel, if I was to buy everything and pay for it personally, I would earn a salary, get taxed, and then have to pay for all those expenses. Whereas if I'm working through a limited company, I can receive revenue, I can pay for all these camera, microphone, lights, blah, 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 and then pay tax on the balance. So making sure that you're getting paid through a mechanism that really makes sense for you is going to be really important. Again, there are all sorts of things you can do with, and again, this is not necessarily tax advice, but if you want to get an electric car or a plug-in hybrid, you can pay for it through your company and pay very low benefit in kind. There are just all sorts of things that you can do there. So make sure you're talking to someone who is specialised in such tax affairs, because as I said at the beginning of the video, in my view, having a full-time PAYE job and also operating your side hustle through a limited company, I think can really mean that you're able to take the benefits of both of those income generating and wealth creating opportunities. Claiming household bills. Now, if you're a home worker, there are some ways that you can claim your household bills, and there are 2 methods that HMRC goes for. There's the simple flat rate, which is HMRC's preference, I think, and is generally easier to calculate. This means that you can claim back a portion depending on how often you work from home and claim some of those back on your tax form. And then the second method is a bit more complicated, which is you work out the total costs of running your home in its entirety and how much of those are for personal. So again, seek all the necessary tax advice, but this can be another good way to manage your tax bill. Marriage tax allowance. Now, if you're in a marriage or civil partnership, then provided one of you makes under the £12,000-ish personal tax allowance, you can transfer up to 10% of that to your partner, provided they make below the higher income tax threshold of £50,000. And maybe the last and most important piece of advice is speak to an advisor. Speak to, we covered this in another video, this one just here, where we discussed there are some things in life that are worth paying for that can start to quite quickly pay for themselves. And I think speaking to a tax expert, someone who can really comb through your finances, who can really understand where all your money is, where it's coming from, and make sure that you're arranging your tax affairs in a way that makes sense, I think is just, it feels like it's the sort of thing that only the rich people do, but I think maybe we've got it the wrong way around. Maybe some of those people are rich because they've had the benefit of this advice. So I think it can be done reasonably inexpensively. As always, make sure you're seeking the help of a qualified and registered professional who comes recommended, is always a bonus, and just see what you can do on this one. So in this video we've talked about some of the ways that you can legally pay less tax with tax day coming up, but even if you're watching this in the Starship Enterprise or something, still watch the video, still take heed of some of the tips, and it might be that you can save yourself money in future tax periods. Thanks very much for watching. Peace.